What is going on, guys? Welcome back to another dividends video. So I haven't done one of these in a couple weeks, and I've been really kind of looking for the right one to actually be able to give you guys and see what I want to do. So today I think I found one that, obviously I'm making this video, so I found one that at least I think I should show you guys, and whether or not, and I'm going to kind of explain why I think I should show this to you guys. I think this is the perfect example of changing markets and things like that. So with that being said, I want to go ahead, cue the intro, and let's go ahead and get into this one. Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's going to help you guys, whether it's long-term, short-term, just in finance and everything like that. So with that being said, let's jump back to the video. So, PVL, Permanent Royalty Trust. So, the best way I'm going to be able to explain this and what they do is it's oil and natural gas. So this is what this company makes off of. Now, the first thing I want to look at here, obviously we're going to look at the price of the stock, which is only $2.14, which is really, really good. Only problem is this dividend. So, your dividend yield is actually at 19.51%. Now, here's the thing, and I've got no problem with this whatsoever, but again, you got to remember, I mean, you could make this out to where, you could buy some stocks to where, if you're getting a cent per share, say you want to spend $100 on it, and you grow it, so, maybe you get a couple, you're getting a couple dollars per month every month, so you're getting free shares basically if you want to throw away some money, which no problem. I get it. I would probably do it for the fun of it. So I want to kind of go into this one, and this is the actual chart. Again, I want to start using Webull more here because I think it's good and it kind of shows some other things that we haven't shown in the past. So this is where it IPO'd back in 2011. $15.77 was the high. IPO'd around $12.85 is where you're looking at here on these but it's been around 14, 15 at the start of that year. It got down to 12, and then as you can see, it just kept getting worse. Now, at this time, maybe it was a good buy, maybe it wasn't. It was an IPO, so nobody probably even heard about it. But here is where, when you see these, when it's still $10, you can buy better stocks for that price. It's getting worse, it's getting worse, it's getting worse, obviously. Now, what I do like about where we're at right now, and this is something where, again, I would probably be the guy that would buy a couple hundred shares, spend a couple $100 of money that, I would rather spend. At least it is an investment technically, rather than wasting it on something else and I get some dividend income every month. It doesn't even mean I reinvest the dividend. Maybe I put the reinvestment of the dividend back into something else every month. So anyways, I'm getting free money off that, but you can read down here kind of where we go over here. It goes over the trust. Obviously, it pays out 80% of the net profit down here. Approximately is where it is. Again, oil and natural gas production, certain properties in the states of Texas, Louisiana, and New Mexico. Just, again, doing a little bit of research. This isn't a ton of research here, but non-productive producing interest in oil, natural gas, wells, lands, stuff like that. So basically, they're in the oil and natural gas industry. There's no problem with that whatsoever. I got no problem with that. The problem I got with is the actual business. Now, again, when we look at these, I want to look at cash flow. It's not even going to show me it. It's not even going to show me it. It barely shows me any of the income here for this month. Don't really like that part of it, so I want to go to annual. And you're going to see actual does technically beat, but again, this isn't something that I would be bragging about at all. So I do want to go back to this because, again, I think this is an important part because it does cost $2.14. So, again, let's go back. If you look at it for the year-to-date or the 1 year, it is slowly going up. So, again, like I said, if you want to gamble on something that's super, super cheap, it's paying a dividend. It could quit paying a dividend at any point in time. But it's not right now. It's got to pay out 80% of its profits, and I'm sure if it's being on the market, it is technically doing something. So I think it would be worth throwing maybe a couple $100 in it, so you get a couple dollars per share. or you're gonna end up with a couple dollars of passive income every single month. That, you know what, if it goes to zero, worst case scenario, you're out a couple $100. That's just kind of the way I look at it. And this would be play money. This wouldn't be my actual investment money. This would be something that, you know, I have sitting in the bank. Maybe I don't go out to eat one weekend or something like that. I have a weekend where I don't do very much, and I just want to invest the extra couple $100. That's where I'd be looking at. Problem is with this company is you can't find a ton of news, you can't find a ton of articles, you can't find a ton of information about them, and that's where it becomes sketchy for me. And that's where these really, really high dividend monthly stocks get sketchy. And that's why I always say, you know, sometimes it is better to invest in quarterly dividend stocks rather than monthlies, because, you know, you're probably going to get a better overall return. You're going to get a return on capital, and then you're going to get a monthly passive income or quarterly passive income, rather than, you know, buying something for $10, watching it go down to something like this at $2 and some odd cents, where, you know, you're not going to be very happy. So you can see today it closed at $2.14. So a 5-cent move is 2.39%. It's actually a very, very solid move for that stock. So again, this is something I'm not gonna lie to you guys, I'm probably gonna buy a couple hundred shares of this just to mess around with it and see what I can do with it, you know, because $100 gets you 50 shares. Why not? But with that being said, guys, thank you guys all for watching this video. This is not an actual investment. This is more of a fun play, maybe, that, you know, we're buying it at such a low price. Maybe eventually it does come back, but you guys got to remember the market that it's in. It is in the oil and natural gas industry. Not necessarily great. Natural gas, I don't think is going away anytime soon. Oil, though, does seem to everybody seems to be trying to wean off of oil. So you kind of make your decision there on whether, you know, what you're wanting to invest into in the long term. Because again, if you're investing into dividend stocks, that is going to be more of a long-term play. And remember, if you don't hold it for a certain amount of time, you're going to have to pay capital gains tax, and you're not going to get the benefits of holding it and reinvesting. So with that being said, thank you guys all for watching this video. Make sure, again, I'm not a financial advisor. Make sure you know what you're doing before you get into a stock. Know what the risks are. Know what the company does. And again, I just told you basically everything about this company that you can find online that I have found. Do your due diligence, and I will see you guys in the next video.